Hi, I'm Ryan Harding, and we're going to talk about interest rates. Interest rates are something everybody wants to know about, right? This is kind of a fun flyer that I created that talks about the different interest rates over the past decade. Okay, so on your screen here, you can see in the 70s, interest rates were in the 8% range, which is crazy. That would put a payment on an average loan around 1986 a month. Okay, which is quite a bit, right? In the 80s, they went up even higher, can you believe it, to $2,700 a month, okay, or 12%. In the 90s, they fell down back to kind of where they were in the 70s to about 8%. And then the 2000s, they came even further down to 6%, okay? These are good rates. 6% is a good rate. That's where I bought my first home at, was actually in the sixes. 6.75 is what it was. Obviously, you can see the payment then drops down, right? Now, today, interest rates on average, and they may be lower right now when you're watching this, but on average, they're in the threes, okay, in the mid threes. That's incredible, okay? And I show you this flyer to show you really how incredible that is, okay? As far as historically goes, these are low rates, okay? Very low rates. And you can see, obviously, that does a lot of, that drops that payment quite a bit, okay? And puts it down to about $1,100 versus, $2,700 in the 80s, okay? Now you may say, hey, in the 80s, homes were only 100,000, and that's probably true too. But, as far as interest rates go now, they're in a great spot, okay? Interest rates are awesome right now. And I would say, hey, it may make sense to lock in that rate, okay? Let me explain something else here with rates. So rates are at historical lows, but they do fluctuate still, okay? And they're like the stock market. They go up and down daily, okay? So here's a couple examples for you. So in 2013, in a matter of about 60 days, interest rates increased from 3.3 to 4.8, okay, in a matter of 60 days, okay? So, that's a lot in a relatively short period of time, okay? Now, on the flip side, in 2014, rates improved from 4.75 to 3.75 in a period of about 30 days, okay, 1% in 30 days. Now, in one single day, they actually went from 4.25 to 3.75 and then back up to 4.25. So had you called me around, 2 p.m., we could have locked you in right before things got worse, okay? And so I share these examples to show, again, the interest rates are volatile, okay? And so when you're asking me, hey, where are interest rates right now? Know that like tomorrow or even perhaps that afternoon, rates could change. And so, keep in mind that they change a lot when you're asking me about these things and stuff like that. Most of the time they stay relatively in that same area, but they do fluctuate, okay? And ultimately that's what my team does is help you get the best rate at the best time, okay? If we think rates are actually improving, if they're in an improving attitude at that time, we may say, hey, it makes more sense to float your rate. Let's not lock you in yet. Let's float. Let's try to get you a little bit better rate because obviously, hey, if we can, let's do it, right? We want to help you, the client, okay? So again, whenever you're buying a home, just know that, hey, interest rates right now in the threes, those are really good rates and it may make sense for you to buy. If you have any questions specifically about your rate or just questions in general about rates, certainly give me a call. Reach out to me. I'd love to help you with this. Thank you.